Contrary to popular beliefs, you don't need a lot of money to start investing and see good returns. Investing regularly is what matters. That said, if you've saved $1,000 and are looking to build a fortune, I have 7 great starting points if you're wondering where to begin. Here's how to invest and get rich with just $1,000. 1. Tackle debt. When you're considering investing $1,000, it's common to overlook the crucial first step of handling any debt you have. Think about this. While it's rare to find an investment offering 30% returns annually, you might be facing a 30% interest rate on a high-interest credit card. These steep fees can rapidly worsen your debt situation and hinder your ability to save, invest, and build wealth. Addressing debt may not seem exciting, but it's a crucial step towards financial security. Even if your debt exceeds $1,000, chipping away at it is essential for building long-term wealth. If you are debt-free but don't have an emergency fund, focus on building one. It will provide peace of mind and prevent you from relying on credit cards or debt for unexpected expenses. Number 2. Consider low-cost ETFs. If you're a new investor, consider putting your $1,000 into an exchange-traded fund, ETF. Now, ETFs are a beginner-friendly alternative to mutual funds that offer a diverse mix of stocks, bonds, and other assets in one investment package. They offer a cost-effective way to quickly diversify your portfolio, often with low or no investment fees. Before investing, make sure to research the ETF to understand its holdings, expense ratio, and associated fees. Regardless of your chosen assets, it's smart to safeguard your portfolio with diversification. With a single ETF investment, you can have both diversification and flexibility to protect and grow your holdings. Number 3. Consider stocks with fractional shares. Instead of spending your $1,000 on individual stocks, consider fractional shares. Fractional shares allow you to buy a small portion of expensive stocks, like a piece of a $2,000 one, for as little as $100. Fractional shares make investing in popular stocks like Amazon, Apple, or Alphabet more accessible and enable diversification of your investment dollars across a wider range of securities, even for smaller investors. To invest in fractional shares, find a brokerage that offers them and purchase them like any other security. But be sure to check for any associated fees, as they can affect your available investment amount. Number 4. Use a robo-advisor to build a portfolio. Robo-advisors are automated investment managers that use algorithm-driven technology to build and manage portfolios for investors. Platforms like Acorn, Stash, Weatherfront offer actively managed portfolios at a lower cost compared to traditional brokerage firms with human advisors, making them popular with many new investors. When you use a robo-advisor, you begin by providing pertinent details about your risk tolerance, your time horizon, and financial objectives. The robo-advisors utilizes this information to create a customized investment portfolio just for you, with many robo-advisors allowing you to start investing for as little as $5. Your $1,000 is more than enough to start. ETFs and stocks are excellent options for investment, whether you choose to invest $1,000 in a single ETF or select individual stocks. If you are unaware about what to choose, a robo-advisor is a suitable option for you. Number 5. Invest in a 401k. Employer-sponsored retirement accounts like a 401k can be a valuable wealth-building opportunity, especially if your employer offers a matching program. A 401k is a tax-advantaged investment plan where the employer determines the investment options you have. A 401k matching program is a key reason why it's a great investment. Many employers match contributions up to a certain percentage, essentially giving you free money. If you want to potentially double your $1,000 investment, Take full advantage of your employer's match by contributing enough to maximize this benefit. Number 6, invest in a Roth IRA. Consider opening a Roth IRA as an alternative retirement account. People often opt for an IRA, that is investment retirement account, if their employer doesn't offer matching contributions for a 401k. They have maxed out their 401k contributions, or if their employer doesn't provide a 401k option. Unlike 401ks, IRAs are not sponsored by employers. Although this means there's no company match available, the advantage of Roth IRAs is that you invest post-tax dollars, meaning you've already paid income tax on the money. Your money grows tax-free, and as long as you follow withdrawal rules, you won't pay taxes on your earnings when you withdraw funds in retirement. Roth IRA funds can be invested in various securities such as stocks, bonds, mutual funds, and even ETFs. You can establish a Roth IRA with any brokerage firm that offers them. Number 7, take care of your future self. If you're in a good financial position, investing in yourself, particularly in your career or education, is often a wise choice. While this is not a typical stock market investment, allocating your $1,000 to self-improvement could result in significant returns, like securing a higher paying job. There are a lot of ways to invest $1,000 in yourself. For example, if you are aiming for a promotion but lack certain skills, platforms like Udemy provide a variety of online courses covering topics like communication, design, marketing, and information technology. Do you dream of owning a business? Well, use your $1,000 investment towards getting it off the ground, or consider hiring a career or business coach. While these skill improvement investments won't directly make you money immediately, the potential return on investment of investing in yourself should not be overlooked. How you invest your $1,000 isn't that crucial. What matters is that you invest. Investing regularly, regardless of the amount, is more important than the initial investment size for long-term wealth building. So make a commitment to invest regularly. Consistent investments, even if they are small, can harness the power of compounding, allowing your money to grow exponentially over time. Go ahead, leave us feedback and share your thoughts. And if you find this information helpful, smash the like button, subscribe to the channel, and share the video with someone who could benefit from it. Until next time, stay financially savvy. We'll see you in the next video.